Hello everyone, this is Dibyush, your CMA faculty. Today we will be discussing two of the most celebrated metrics in the world of finance, SWOT analysis and BCG growth metrics. So in the course of next 2 hours, I will introduce you to the world of SWOT analysis and BCG growth metrics and teach you from start and teach you till the end, that is scratch. Without further waste of time, let's start with the SWOT analysis. Most of us who are associated with the world of accounts or finance in any form have heard of this term, SWOT analysis, and I guess most of you already know the full form, that is strength, weakness, opportunities, and threats. But what actually is SWOT analysis, and how do we implement it to improve the business? Because when we become management accountants, we will be sitting on topmost levels of the companies, CFOs, COOs, and at that point of the time, the CEO of the company may ask you for a very vital decision to be made. At that point of time, you will still have to go back to this matrix, study it carefully, and then advise the CEO. So focus very diligently on what we are about to discuss over the course of the next 2 hours. SWOT analysis. Now, let's discuss it from a student's point of view. We all are students. You guys are still studying. I am also still learning. What can be a strength for a particular student? Let's say we all have had a number of subjects to study, right? Remember those school days, those heavy bags, 15 books. Now, till the college days also, even in commerce background, you have accounts, you have costing and financial management, you have tax, law. What can be possibly a strength for you? A strength is that particular subject for a student in which you do well, in which everybody else thinks you are doing very well, and you understand it and do well without putting in too much of extra effort. For me, that was generally accounts and cost and financial management. Some were also very good at theory papers. Every different student has a different strength. In the same way, a company or every company has a different strength. For example, let's take Apple. We all have heard of Apple, right? World of iPhones. I believe half of you already have it and half of you plan to have it. What is the strength of iPhone? After all, it's just a mobile phone, right? Innovation and branding. That is why the product differentiation is the core factor why the customers are willing to pay the premium prices for it. It's very expensive. In Indian markets, it's cost like more than 80,000-90,000. But we are still willing to pay the price for it. Why? The product differentiation, and we can also say it's the product superiority. Coming back to the student's point of view, every one of us have a particular strength in a particular subject. Now, just because you have a strength in a subject, that does not mean you will stop studying it. In the same way, just because Apple already has a product superiority, it does not mean it will stop doing innovation. Or else, new companies, there are rivals sitting in on its throats. Samsung and MI, Redmi, they will barge ahead. 20 years ago, Nokia dominated the world's markets. That was its strength. It stopped focusing on innovation and it lost out. Today, it hardly like it sells that many models as it used to do. So just because you are good at something, that does not mean you stop doing it. So while studying strength, the first thing when you are advising management that this is our strength, that this is our core area of focus, we do very well in this, you also need to keep on reminding the management because you are the management accountant. Everywhere management will turn to you for an advice. You need to keep advising the management that we need to keep on focusing on the same. So why? So that we keep on maintaining the market share that we have. Any questions on this? Good to go. I did not find any questions, so we are good to go.
Yes, sir.
Second, yeah, so what is the question?
No, sir, understood.
Okay, so we are good to go. Second is weakness. See, just as we all are good in some subjects, we all are bad in also some. For me, particular, that was history and civics. Specifically the civics portion. I was not very good at it. But, and my friends, my classmates, some were very good at it. While you are sitting with the management, same goes for the company point of view. We were discussing Apple, right? What is Apple's weakness? Strength, product superiority. Weakness can be easily copied. It can be easily copied by Xiaomi or any other competitor, and they can sell the same software immediately at a very less price. That is a weakness for Apple, and that is why they constantly need to innovate. So weakness is something that needs improvement. Like for a student, it's a subject. For a company, weakness is something that the competitors are doing better and where they are lagging behind. But always remember while advising the management that just because you are weak in something, you don't leave it. You have to give it an honest try. So, because a weakness can turn into strength if given a proper efforts. One very prominent example is our country itself, India, 20 years ago, 2000s, most of you were very young back then. So at that point of time, the entire world used to think India would explode. 100 crores of population, poverty, and lack of living space, lack of infrastructure. This was considered our core weaknesses. Companies did not want to do, like global companies, did not want to do business in India. We worked on it. First, we became an IT hub. TCS, Infosys, Wipro. We worked on it. We embraced technology. We understood that though we have a more population, that also means we have more people to do the work. So now, even a person sitting in US gets his income tax returns filed somewhere in Bangalore or Mumbai. So we transferred our weakness, that was our very high population, into our strength, that it is a world-class labor force and that too very young. So same, and further if you understand that the state of Uttar Pradesh alone has more or less equal population to that of the entire United States. So companies now, global companies, suddenly realize that even if they capture 10% of India's market, they will do more business than the entire United States, perhaps. And that is why you see Apple CEO and Google CEO constantly visiting India. How? Because we turned our weakness into our strength by working on it. So what SWOT analysis, first two things, strength and weakness. Strength, let's summarize. Strength, something we are already very good at. But we need to continue to be good at it. So we continue working on it. Weakness, something where we need improvement, right? We are not very bad either, but we are not at the top either. We need improvement on it, and we'll work even harder to achieve that. Now, as you both understand, and as you could understand, these are internal factors. Strength is within me, weakness is within me, and I can work on it, and I can change that. So these both are just plain internal factors. What are external factors? There are always external factors, right? Floods, COVID. Let's take the example of the prominent external factor, COVID. It came, it disrupted all of our lives. Be it student, be it working professional, everyone's life got disrupted. But that was an external factor. We could do nothing to prevent it. Yeah, but after COVID came, companies devised ways to work across it. In the same way, let's discuss the two external factors in the SWOT analysis. First, an opportunity. Go back 5 years. On that 21st of November 2016, if I correctly remember the date, forget me, I'm getting a little old. A Prime Minister comes at 8 o'clock in the night and he says 500 and 1000 denomination currency notes are banned from today itself. And ATMs were very short of cash back then. And 80% of India's currency in circulation was in 500 and 1000 rupees. Businesses got disrupted. But there was opportunities for some businesses in that. One was Paytm. Suddenly, we saw that, oh, why do I need to carry cash? We can just use our fingerprint, scan a code, and pay bank to bank. That was an opportunity presented through the Paytm by the external factor. It was still there from probably 2 years ago. But suddenly an opportunity came which made things favorable for it. And believe me, it lashed into that opportunity. Go into any shop today, be it a grocery shop, even a pawn shop, they will have that UPI scanner outside where you can just scan and pay. Ask any of your elder brothers and sisters or even your parents. 5 years back ago, we generally carried cash. So to conclude this, I want to say opportunity is something that are present in the market, or we can take advantage of that. But that is not in our control. Let's take you guys, for example, when I was studying a decade or 12 years back, there were only 3 courses in the market: CA, CS, CWA. Passing rate as 10.5%, even in the finals, guys. Believe me. So after reaching the final, after giving 13 papers, you still have 95% people failing. Today, you have a plethora of opportunities in front of you. You can pursue CMA, CPA, ACCA. Almost at like to complete your CMA in less than 9 months or 10 months, and you get the same salary, starting salary, as an Indian cost accountant, almost identical. At least we at Zell ensure that you will get that by placement agency. So what has changed? Opportunities present in front of you. Now, how can you leverage this? By properly researching before you choose any career stream in front of you. these courses have almost 60 to 70% pass ratio, like global pass percentage, whereas Indian courses 4 or 5%, and you invest years in that. This is an opportunity that was not present a decade back in the market. You guys are lucky that today we are discussing all this. So you can just take advantage of all these courses and earn more or less the similar money as an Indian CWA. But how does this really happen? Why? Because a lot of MNCs, specifically US MNCs, are now operating in India, in big metropolitan cities. They constantly need CMAs who understand what is US GAAP, who understand how reconciliation is to be done, so that they can report to their parent subsidiaries in the United States. Now, as you see, this is an opportunity presented in front of us that was not there a decade back, and the market presented. Threats. Let's stick to the favorite topic, COVID. We will discuss the business factor later on, that what can be a threat for a business, but just consider for a normal human being. Something like COVID, it just came, disrupted our entire life, put us all into a room where we did not know that what will happen next day, who will get COVID, who will not. Try to understand that from a business point of view. Threat is something for a business. A new technology comes, disrupts an entire market, and you can do virtually more or less nothing about it. This is generally prevalent in a very high technology market. Like when iPhone came, many phones became suddenly obsolete overnight, because that was a revolution. And let's stick to our Indian core. I just want a little bit of your support here. I remember most of you would have been using data, I suppose. Before Jio entered, I think, correct me if I'm wrong, Airtel and Vodafone used to charge us almost 250 rupees for 1 GB of data. Am I right?
Yes.
Today, Jio came, disrupted the entire market for Airtel and Vodafone. And we use 399 plan for, I think, 84 days, and we get 1 GB of data every day. What was the threat in it? Nothing for Jio, but definitely for Airtel and Vodafone. Vodafone is nearly out of business. Airtel survived because of stronger cash inflows. Summarize as it that strength, weakness, opportunities, and threats are present in every business and in every industry. When you as a management accountant will sit on top of the chair, you need to advise the management in what is the best interest of the company. And as a student right now, you need to analyze your own strength, weakness, opportunities, and threats. As I said, what can be a threat for you? You choose an Indian CWA course. You spend 5 years studying on it. You waste 5 years of your life, and in the end, after multiple attempts, you give up. What can be an opportunity for you? You join a US CMA course, 9 months, you qualify, pass percentage of more than 80% at Zell Education. So you already land a dream job. So 4 years later, when your friend does qualify with the Indian CWA, you already have a 4-year experience in your bag, corporate working experience. So you are using opportunity and leveraging your strength in that. Any confusion on this, or can I proceed ahead?
No, sir. No, sir. No confusion.
Now, this is a chart where we are just broadly writing numbers. Let's discuss a real world example. Let's do a SWOT analysis of Bandhan Bank. I believe we all have heard of this bank. So it's a publicly listed company. What are its strengths? I have worked in the bank, so I know it like little better. But let's analyze what can be a banking strength. First, as a bank, they have a national presence. They are there in Calcutta, Mumbai, Delhi, Bangalore. Their financial position is very strong. 2 years back, I think they had the highest return on capital employed in the entire banking industry. They have a strong and robust workforce, like more than 50,000 something. They have had recently a merger with Group Finance, which brought 2 lakh crores of housing loans into their books overnight. Their interest rates are competitive. More or less, they offer the home loans and other products at the same interest rate as that of other Indian leading banks. Where is the weakness? Retail branches. We don't find as many branches of Bandhan Bank as we probably find of HDFC or ICICI. Why so? Because these products, there is lack of innovation in these categories. You need to call every day to sell a credit card. We all receive calls, right? You are 2 young students, ask your parents. Every day we receive 15 calls from this bank, that bank, to buy a credit card, lifetime free. But we rarely receive that call from Bandhan Bank. Why? Because their retail business lacks innovation. They are not able to sell their products properly. Second, their branches are mostly rental branches. So they are paying a very high rent. And most of the other leading banks have already acquired property because they are very old. This is comparatively a new bank, just 6 or 7 years old. But what can be an opportunity in front of a bank like Bandhan Bank? First, the population is growing. So is its market. Earlier, it was only restricted in the eastern region of the country, where more than 75% of its business was conducted. Today, it is spreading across to Mumbai, Delhi, and it is trying to compete with the other leading private lenders in the country. Then another opportunity, see, today we all know social media is the most powerful tool. If we see an ad every day that you get a car loan for 6%, car loan for 6%, you may end up taking a car even though you don't need it. Bandhan Bank, it is presented as an opportunity, but Bandhan Bank lags behind in it, specifically with respect to HDFC or a Kotak Mahindra Bank. Today, any product which needs to be sold has to be first sold through Facebook and Instagram, where there are millions of people like us logging every night to get some rest. What can be a threat for a bank? Threat for bank is generally amendments and regulations. Tomorrow RBI comes and says, hey, we are changing the cash reserve ratio. Cash reserve ratio, a new term. It's nothing. Let's keep it simple. Like RBI is the parent bank. So every bank has to keep a certain percentage of their cash as deposit with the RBI. That is simple cash reserve ratio. Now what happens is, the more cash RBI keeps, the less it is for banks to do business. Suddenly tomorrow RBI comes and says, we are increasing this percentage. Now, not only Bandhan Bank, see, threats are generally industry-wise, as I said, external factors. So for any bank, they will have less money to lend. Less money to lend means less income on interest. And then we will also get less savings. Less interest on our savings. Second, what can be a bad news for a bank? Bad economic conditions. When COVID struck, many businesses went down. Along with that, many loans also went down. Now, big lenders like HDFC or ICICI, they are in the premium category. They lend to Reliance, they lend to Tatas. So their loans are more or less safe because of the volume. But these banks, Bandhan Bank or that AU Small Finance Bank, these are generally dependent on small loans to small entrepreneurs. Specifically, they deal with women entrepreneurs. Suddenly, NPA started happening, which is a pure external condition. And profit of these banks were hit more than what HDFC or ICICI was doing. What can be another threat? Since HDFC or ICICI are already very well established in the market, it is very difficult for these banks to compete. See, I will explain you a very simple thing, right? Bank borrows money. Don't get confused, they do. They borrow it from us. We go and we deposit money into the bank. That is how the bank gets the money to lend it out to the customers. Now you see to it that most of the companies like HDFC or ICICI, on their savings account, you get hardly 3 to 4% interest rate. But these new age banks like Bandhan Bank or a AU Small Finance Bank, they offer you attractive rates of savings, right? 6% almost. Am I right, guys?
Yes, sir. Yes.
So when they are borrowing money from us at a higher rate, they also have to lend money at a higher rate. It's a simple rule. HDFC is taking money from us at just 4%. Because these banks are new, they are trying to attract us by offering us 6%. But that also means they need to earn 2% more on their capital employed to get equal with the HDFC or ICICI. So there they are always struggling. What happens if suddenly their loans start getting bad? Yes Bank. That was a big bank 4 or 5 years ago. 2 years back, suddenly the news comes that Yes Bank is about to go bankrupt. And now, as a government policy, government never lets a bank go down under because that presents a bad image of the country. So Yes Bank was done, money was invested from SBI and others. But what happened with Yes Bank? They did a lot of personal loans. They were at a very high rate or low rate to bad customers, which suddenly became NPAs. What is an NPA? Non-performing asset. That is what most of our parents call us, right? We wake up at 10 in the morning, they will call us, you are useless. So for a bank, a useless customer is an NPA. Nothing more than that. Non-performing assets. So to summarize in that, don't study this SWOT analysis just as a fixed terminology. For every industry, the strength will be different. The weakness will be different. Opportunity will be different. The threat will be different. You, as a qualified management accountant, will have to advise management in accordance with what is relevant for the industry. Now imagine you are sitting for a TCS, you are sitting on a board of the TCS 30 years later, and or some of your friend is sitting on the board of Reliance. Both of you will be doing the same SWOT analysis, but your results will be different. TCS is an IT company. Reliance is mostly a telecom and a petrochemical refinery conglomerate. SWOT analysis is a matrix which will be done by different people, giving different results. Just like I presented to you so many times that you can have your strengths. You guys have the biggest strengths as the student. You guys have technology on your side. You guys can do classes anywhere from across the India with the best institutes and the best faculties. You guys have brilliant opportunities in front of you, like Zell Education provides, CPA, CMA, CFA. 10 years back, these were not present. We all used to go back to the courses like CN. Back then, the results were even bad, 1 or 1.5%. Now, just like when you do your own SWOT analysis, it will be up to you how you see your opportunities, your threats, your weakness, your strengths, and you leverage each of them. In the same way as you will be doing for a company when you become a management accountant. Are we good to go, or any doubts or any confusion?
Understood, sir. I think we are good to go.